It's all good. It happens. Can you hear me now? Yes. All right. So thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. As I was saying, when we look at the charts, it's kind of a manifestation of the desires that we hold as a human species. It's pretty crazy. I mean, we have in Buddhism, you have the 108 worldly desires. They call them Bonno in Japanese. It's 108 desires that keep us tethered into this matrix of the world that we live in. And you may see the loading screen have that dagger hanging above my head. This is this Tibetan dagger that basically those 108 desires boil down to 3 simple desires. They're called the poisons, the 3 worldly poisons. You have fear, greed, and ignorance at the source of it all, kind of fueling the fire of the human condition and the mind, and all the things that come with it, from war to famine to pestilence, and our idea of what value is. Like, what is value? We're staring at these charts and we're seeing the fear and the greed and the ignorance manifest itself, and we're seeing the old vestiges of value start to die as people start losing their faith in them and see through the lies and the deception of the banking systems and the elites and whatever you want to call them, the owners of humanity that try to steer human sentiment. And just as an ant colony has no single ant behind the wheel, we as a species don't really have one single ant behind the wheel, but they like to pretend like there's some sort of understanding that people can glean. So you have these weird groups that appear out of, to divide for power. You have the 3 banking systems, you have the EU, you have, the BRICS versus the Fed, and you have all these central banks fighting for power as well as countries fighting for power, and they're all just kind of clinging for some sort of semblance of truth and order, and it's just craziness. I mean, and so every time you step into the charts, realize you're looking at the collective intention of humanity. It's kind of like a fear, greed, ignorance, graph of this hive mind that we exist in, that we don't quite clearly grasp as a species just yet. But this is the graph of humanity and where we store our value, and what does value even mean. So there's these concepts that go deep when you start getting into finance and stuff, and you start realizing that it's all kind of a farce. It's kind of this thing that we all take part in, and then the banks are starting to fail, and there's all this uncertainty that starts to get stirred up in the air. And then as that uncertainty comes in, they go towards the direction where the sentiment was faced in the fear to continue lower. And we were talking about over the last 2 weeks about how the liquidity stated that there was this bubble that was hanging above our heads. And I was saying, do we go up to go down to go up to grab that bubble? It's not a matter of if, but when we grab that bubble. And I was looking for, when we make this lower low, that how low do they go? My question has and always was, how low do they go before they go up again? And how much of their fill do they get before they finally surge it up to that region? I definitely didn't expect it to be this fervor, but who does? And that's the point. They want to avoid the least amount, paying the least amount to the direction it's actually going in. And can you catch that? The one thing I look back on that, sometimes the indicator calls out before everyone else would be basically that, we had a rocket ship that appeared down here at 20K. This rocket ship appeared, however brief, and then kind of went out of that zone. So that was kind of interesting. I mean, the indicator just kind of calls it sometimes, and if you just stick to your guns on what it's saying a rocket here, I'm going to take the rocket. It does those rockets. And so yeah, we came back into the mean, basically from this impulse retrace idea of the mean reversion. We came nearly back down to the mean of this red line at 0, and it was just a little bit off the 1618 here, which happens to be a larger time frame impulse to the upside here if you take this from wick to wick. We're bouncing off the 618 region of this larger fib pocket here. And let's go back into the liquidity. We previously had about 30 billion in short liquidity imbalance here on the 1 minute time frame, which goes back about 6 days, which now get knocked down to 13 billion, 14 billion in long short liquidity imbalance as they went and gobbled up the shorts with a fervor. All right, so let's go ahead and go into the heat map here. Thank you for all coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and coming on in. Hopefully we got everything going smoothly here. All right, there we go. So let's take a look at the charts and the liquidity here. We're going to go to the 7 days. So on the 7 day, we were building a larger pool up here to the upside at 22K, and we came and grabbed it, and we're starting to build another pool back up here. There's more short liquidity paving the journey to the upside here. Just people can't believe it with all the FUD in the air, that it just can't be real that we're going up higher, and that's just funding the journey higher. As you clearly see, there's not as many entering down below here on the 7 day time frame. So if we go to the 1 month time frame, let's take a look at that in more detail as well. Starting to see it get nice and caked up in the 26 region. I came without, and they skipped this region because there was not that much down here. So while everyone was getting bearish, they're like, don't mind us, zip, and they zipped right up to where it starts to get thicker now for short liquidity. So they've clearly broken structure and expressed their interest to aim at the shorts right now. So the shorts are getting they're quaking in their boots, to say the least. And let's go to the 3 month. So this is why when we put out things like a scalp or a, the idea of it coming down so you can get a better long entry, the overall sentiment we were talking about was how low do they go into this liquidity before they have that surge up to the 25K region. We are talking about this for days and days and days. We've been just saying, why would they leave that there? Why would they leave it? And we they left this here for now, and that's because if we go to a higher time frame, you start to see it thin as the balloons above us start to thicken. So as you see, this 25.6 region, $178 billion up here at 25.6, 110 at 26K. 87 at 26.4, 130 at 26.8, 73 at 27.2, 121 at 27.6, 74 billion at 28K, and it starts to taper from there. But you have a nice caked region, just a hop, skip, and a jump from where we moved up. So we just have to move the rest of this journey up to the 24K region. There's still some 100 billion down below at the 18.4. 87 billion at 18.8. It's not the end of, it's not necessarily, there's nothing down here for them to grab either. So this could just be a fake out before it continues lower as well. There are no guarantees in trading. There are no guarantees in life. So you just look at what is offered to you. But just as it came down and got these guys, when they gave the idea of a double bottom here, and they came and grabbed this caked up region, this is starting to get caked up, and we've been talking about this region. Like, when do they think they're coming back to this? Because it's clearly not over for that side. So if we were going to see something lower, we were talking about a triple top situation. Shout out to Jason Casper, who put out that idea for having triple top, and 1, 2, 3, you could have that triple top as you take out this liquidity and then you drop it. If there is going to be some sort of financial recession or bank failure or some other cascading fear-induced event. So the world is kind of in a state of uncertainty as we covered up our mask. This is one thing in Japan. Today was the day where they no longer compel mask requirements. They never really had a requirement, but Japan is a culture of face and a culture of, not being, they have this expression, the nail that sticks out gets hammered down. So no one wants to be that nail that sticks out. So everyone wears the mask because that's what's expected of you. I wear this silly face shield because I wanted people to see my face and everything when I teach and whatnot, because it's ridiculous. If you study science and whatnot, there's a lot of reasons why the mask idea itself is dumb, but not only that, we've evolved alongside dogs, for example. Like, you could take a wolf and you could try to raise it and it won't recognize our micro expressions. It just won't. And there will be these fundamental things it cannot understand about our face, but a dog can. And so these things that we co-evolve in kids that grow up seeing facial features and those micro expressions, it's totally, we don't know the impact of blocking that for 3 years. That's crazy. And it's always been crazy to me, like, what are we doing? And the ability, when you see a smile, even if you see the smile on the other end, it causes a serotonin release in your brain, and the oxytocin flows in your brain, and you get happy just by seeing a smile. And we've been denied that essentially to our species for 2+ years. For what exactly? And it's good that we're finally starting to move on from that, but the damage has been done, the separation has been felt, the distance has been achieved in terms of communication breakdown between countries and whatnot, supply chain breakdown, all this other stuff. So, is it necessarily going to cause a bull run once they get this liquidity? I have no idea, but I don't really see it that high up here in the meantime, so it could just go further down. This could just be a bull trap that ends at a certain point after this liquidity up here. I don't get bullish or bearish. I just look at where these liquidity pools bear fruit. And by bear fruit, the entity that is the market maker or the liquidity provider goes clearly to the liquidity and grabs it. So if you study the liquidity, you're bound to see the direction before all of this FUD and stuff occurs. And it's just funny how the FUD coincides with real stories, and the charts kind of countermine that because everyone's too bearish to take a trade for a long. So it kind of says, okay, we'll go up while you're making up your mind. We don't mind not paying you. And that's what happens. So let's go into the charts. A clean chart with just fibs, no diagonal fibs. I just like them for fun, whatever. But let's take a look where we were at. So we had this bounce from this previous region we were talking about from last Friday, and we were yesterday talking about possibly coming down here, and it was around this region just before we surged out. You would have been able to see on a certain time frame here, let's just go back to that moment, you would have been in profit and seen something on the indicators on the cloud here with the thinning of the cloud and the 3 on that time. So once we put out that you were going to go down and you would have been into profit here, you would have seen that unless you break below the cloud, that short is not valid, and you would have probably seen bullish divergence as well. We were talking about the hidden bullish on the hourly here, and if the Williams reset, we would see possibly going higher based off the liquidity we were nearby at. But if you're range trading a scalp, then it would be wise to see how the 15-minute reset. And in any event, if you see these, you see this, this was where we started to see it break down, and you're seeing this hidden bullish divergence on the 15-minute as well. And you got the Williams to reset in a nice manner. So this would be where you would just reconsider and see where you could take it if you're getting that squeeze or not. And sure enough, on the 5-minute, yeah, on the 5-minute you had the rising sun down here. After the bearish divergence played out, you got front run on the divergence here at the bottom of the Keltner channel, and boom. All right, let's go to the weekly candle close and see what happened for the weekly candle close. We'll turn off everything and just take a look at it fresh. So we had a huge buyback wick. Interesting bullish sentiment here. So you went all the way down to 19,500 region, and then you started the week at above 22.4. We're currently above the weekly open from last week, and we dropped down to 21.9. We closed at 21, near 22K, and we're seeing already the surge up from this bearish projection. We're nearly negating this entire bearish projection. All of the levels have been hit down to the 168, so we could delete this now at this time, and we can start thinking about bullish projections too. Like if you want to look at the bullish projection for a weekly time frame, like is this, if and when this continues, I have no idea, but you could say if you go down to here on the weekly time frame, your 236 is at 21.68. Now if we can hold this 21.680 region, then you could see these larger paths into the future, perhaps for the weekly time frame. We did talk about in the past the 2-week chart had this golden cross event on the Williams. We were talking about the only time that occurred in the past was back here on March 18th, Monday, March 18th, 2019. So now we're at March 13th, 2023, and we're seeing this crossover event as well. So are we going to see this kind of upside potential on this Williams? I have no idea, but it's interesting to note we've only had it one other time in 2019. So if we were to go see more upside as the Fed has to turn on the money printer and things start getting valued more, since their clawback, their financial repression clawback being turned off, we could see this come into reality as a rise, retrace, continuation idea. These are the levels for that type of impulse on the Fibonacci sequence on the weekly time frame. Now all of this, for all of you would need to hold true to that 236 level at 21.680 at this point. So we've already established that the weekly time frame closed in that state, and the new weekly time frame is already on the course to that idea. Now the 25.896 region, the 706, where you could see that triple top kind of failure, would also coincide with, you see 25.896. We go to this idea up here on the yearly time frame. $25.6, 2600. So at the 26K region, basically you have a lot getting released, and it starts to get a little bit more at 26.8. But yeah, basically if you break above that 25.6 region, you have this whole nicely caked up path to 28K of liquidity. So it first has to break above the 26K region, and then at 26.64. So at that 26.800. So you go up to the 26.800 region. So you go back up to here and kind of meander around and flag out here and kind of figure out what they're going to do, whether they're going to drop down or not. So that's what these 786 walls would be. Whether it gaps up to this region or not is how much it can induce and eat up of the late longs and stuff like that. So this is just charting a kind of like longer time frame journey, perhaps out of this range into these regions. I have no clue. I have no clue where it's going to go, but you know, if the money printer gets turned on and they save these banks from foreclosure, and you know, there's some sort of, you know, pivot from the Fed, unbeknownst to them, because they don't really know what they're doing, they would be able to see the value increase in the global market scheme, because they would be turning the money printer back on, in essence, similar to what they did in 2020. We're going to look at something with the S&P that I was looking at a long time ago, with how the S&P how they inflated the markets with their stimulus packages and stuff. So we have this, drop down. This entire region is kind of like a fair value gap. If we go back to the replay tool here, got some new music playing. How you guys liking the beats? So this entire thing is a fair value gap. We were talking about retracing somewhat into this before we went down originally, which did not occur. They just went right for it. So this entire region really is like a gap of liquidity that they could come back to at any given moment. We're already starting to eat into that fair value gap here. And so this is the levels we're looking at as we go along. This is the levels we're looking at. Thank you for coming on in. Got kicked off. The internet is laggy today. Nice. For everything being good on your end, not the lag. So we're starting to see this. The 12-hour, we had the sun cross on the rising sun on the 12-hour, kind of gave us that push. We had the money flow also flowing beneath the RSI. It could come back up to it, which could see a burst in as it goes below the RSI. It kind of gets gravitated back up to the RSI. So that could happen. That doesn't necessarily need to come down because it's in this region per se just yet. You are getting a bit stretched on the Williams here, but the moving average of it could come up some more before you cross over on it. So it still has time. It can flag out, go sideways, kind of ascending channel upwards to see what it's doing on the 6-hour. But you are getting to the play. Remember, today is false move Monday, everyone. It is Monday, so they false moved up. Are they going to false move down? You never know. You always got to keep things in the back of your mind for going any possible direction whatsoever. So we got the 4-hour overbought too, kind of meandering around here. So we're going to go look at lower time frames now. We know that the 12, the 6, and the 4 are overbought. We're going to look at the 22 as well. I think that probably got some love as it closed. By the looks of it, it did, and we got the crossover event. All right, so let's go to the hourly time frame and get out of B really quick. So we're overextended on the Williams, and we got a reset of the stochastic, which could be bullish in the sense that we didn't give back any price action. We essentially went sideways here above the bearish fib trend level, and we gave back the stochastic data here, and so the probability had reset to an oversold status on the hourly. So here it could have also been a possible entry, even though you're overbought on this. When the squeeze is real, the squeeze is real, and then this is when it gets pinned up here like this, as it did in the times past. These are noteworthy levels where things do turn around though, so when you get these alarms and they do play out, they play out with the fervor, so they're not to be ignored by any stretch of the imagination for sure. And then we go to the 15 minute. 15 minute getting overbought. Go to the 7 and the 10. I was liking the 10 for a while, so let's see what the 10's doing. It's all good. I'll edit out that first part where the mic was muted. So we could be getting a double top situation out of this on the 10-minute, like breaking through. Let's look at the 1 minute really quick and see where the liquidity is building. We do have a stacked level to finish off that, you know, amount that's caked up here. So you have less longs in the immediate vicinity. You do still have some over here, but overall you've been caked up in this region. So you have 100 million, 122 million. This region at 2273 is thicker in terms of what's nearer by this black line here. So it's kind of trying to go down to these 100x down here and knock them out before possibly going up to that region at 2273 by the looks of it. And above you have 22.9 up to 23k to clear the entire region. So at 23k, where does that put us? 23k would put us up here, just at the 706 region for that internal fib of the fair value gap. So we're starting to dip into this liquidity that happens to also be that fair value gap. So if you don't have high block capital, you don't, fear not, you can guess what's happening based off of this fair value gap here, like how many trades are actually open. So without me, you can kind of see, you know, this is giving you Fidelity, you know, the free value of the $70 a month for this, you know, on the stream every day. You can see where those trades are open, but you can also visualize that yourself based off of finding these fair value gaps and then seeing where it could come back to based off of Fibonacci and whatnot, where it would fade, and that math happens to coincide with a lot of liquidity that's trapped, and they induced some shorts here at 22.73 all the way down here at 21.8. So now we're at 22.4. They previously got them all the way up to that region, but there's still a little bit more caked up in the upward regions at 22.7 and above, up to 23k. So this entire pool is at play for being grabbed right now. And sure enough, they're heading up there. So let's go turn on the indicators. I think we got a fair understanding of where that is. And so that's what these Keltner channels can help you with as well. You see these little dynamic support and resistance ideas, so you could just take it to the top of this thing and short it to the bottom of it, and then to the top and the bottom, and if you're holding this ATR line, then perhaps, and you're getting the crossover here, then perhaps, and you're holding the weighted moving average and the adaptive moving average, perhaps the long is the better play to play here. So you see this playing out, and then we reached up above here, started to fatigue outside of the Keltner channel, and on that 1, 2, 3 hits to the high, we came back down. We got refueled off 2 time frames oversold, and then we came back up to here, currently 5 time frames oversold. We went over what time frames those are, and you can see them here on the 15 and the 4 hour. And it looks like we're aiming at these targets at 22 and the 23k region. Let's go see what the dollar and all of this fun stuff is doing in this crazy world we live in. How y'all doing out there? Bear CBD on the 15 minute. Shout out to Rainier. Hope you're feeling well, my brother. So the dollar could come down to this region at the 236 and find some sort of support structure, which also happens to be the ATR. That seems to be the next thing that it dropped out with the fervor from here. Okay, oops. Why did that get deleted? All right. So we could come down to the 103.36 region as the dollar starts to take out some of their value to bail these banks out. So you're going to see the dollar kind of tank as it takes its money and does its thing to turn the printers back on and decrease its value. So it was attempting to turn on the interest rates again to increase its value again, and the banks and whatnot are saying enough is enough, and it's starting to come back down. How far down into this region is what the Fibonacci is for. So you have these retracement tools that you can do, and you pull them on the daily time frame. And we got a previous bounce twice on the 618. So if we don't hold this bullish trend-based fib tool here, then the next level to look at is the 618 at 102.75. And if we look at the 3-day, the 3-day on the dollar and the weekly on the dollar, not so hot. So for a start to the dump for the downside on the weekly time frame, and the 3-day time frame for the dollar could be going much lower. If we go to a weekly time frame here, we're definitely seeing some shenanigans with the banks, you know, Bank of London wanting to make a bid on Silicon Valley Bank. So on the weekly time frame, you could see the weeks come back and double bottom off of this Keltner channel too, if it doesn't hold this region. But that's a long ways away from now. Let's go see how the S&P is faring. So we said the S&P, we called this little projection zone. We've had it for since Friday, really. So we had this, and it started to head back into that region, and now it's bouncing off of the fair value gap, which we've had since here back in January. We've had it there. So it's now bouncing off the fair value gap region of that zone, which coincides with all of that fun stuff from the bearish projection that we put out. So if we break out of that, we go back up to the 786, which happens to also be this higher time frame trend line. Here's the trend line. All the way back here from January 2022 or December 2021. And so we have to break above that. It's a long journey above, but it came back to that region and cleared that fair value gap. Pretty cool. So we're starting to see that come true, and yeah, we didn't change the projection at all. It was there from the start, and the 6-hour is ready to go. So you're starting to see a potential of 5 time frames oversold on the S&P. You could see a bounce for the stock market and the S&P this week, or at least until Wednesday, in terms of going up if it doesn't get rejected along the lines on this resistance to the upside. So remember, as the sentiment shifts, for when people are confused and they're looking at the banks failing and they're not sure what to do, they're uneasy to long, and then so it automatically would find it easier to go up because there's less drag created by people longing. So it's kind of ironic. I remember going back to February 24th. Like, let's go back to Bitcoin on February 24th, shall we? I want to go back in time to the war in Ukraine time and just show you what happened back then. Okay, so we're in February 2020. There we go. All right, so we'll go to the daily time frame real quick. All right, so the 24th. This was when Russia invaded Ukraine. So it was pretty bearish. The world thought it would be an easy short, and it already kind of caked it in, or rather Russia probably caked it in by trying to accumulate at the lows. So you realize that Bitcoin is also usable by governments too, to hide their value and store their value and take it out at their leisure on the backs of retail or whatever. So you could be seeing. So here we go. Whoa. Slow down. There we go. So right here we had, February 24th from 5 a.m., 9 a.m. we dropped. you know, it was already announced around here that they had invaded, and then boom, they shifted out, and then they bounced off the cloud on the 4-hour and they were gone. So you saw this surge up right at the most bearish time. You had a 30% gain for Bitcoin right as a war was starting. So, you know, it doesn't seem to add up in terms of, you know, at the most fearful time it starts to go up. But that's basically how it works, because there's less people entering longs and there's more people entering shorts, so it just goes and eats the liquidity that presents itself. And you have an inverted head and shoulder, kiss of the cloud, beautiful long to the upside there on the 28th last year. So same kind of situation, people getting bearish, banks about to fail, boom, starting to come up. So what would you like to see here? You would like to see some sort of like thinning of the cloud, and we break through the cloud, and what do? You retrace back into the cloud at some point too. It depends on how much of a fervor. Wow, they've already gone up to that region. That's crazy. I just missed this huge pump on the 10 minutes. So they just came right up to that liquidity and they popped it. We put it out there as that idea and it just came right back up to it. Crazy. So, and you're getting a large amount of longs entering here too, 400 million in longs, 3 times. So there's a lot of volume stepping into this chart to push it up here to this pocket right here at 23K to release all that liquidity. If we go to the monthly time frame, let's take a look. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in today. So we're reaching up into this region. So we already know that that candle is that fair value gap, so we're just going to leave that fib there. Well, I guess we can leave it because it had the top of the range there for it. So you're starting to get the squeeze on this, getting through to 23K. 23.2 would be another 11 billion, or sorry, yeah, 11 billion released at 23,200. And then you got a little bit of a gap here on the monthly time frame, and then just above that at 24. This is pretty amazing how quickly they just came right back to it. Let's go to the 3-month. And boom, they broke above it. They're going with the fervor, ladies and gentlemen. They are going with a fervor. So you got 20 billion at 22.8, which they already came back to. This is a little bit late in updating. So they've probably already released this $20 billion and they've released this 13 billion. So they've released $33 billion up to 23K just now. And you have another $17 billion at 23.2. After that, it starts to taper down to 2 billion and 3 billion, so you'd probably see it chill out a little bit at 23.2. So just off of the simple projection here, you could kind of also see this impulse to the upside and retrace here, and this kind of idea of the 236 to this region would be your immediate idea of bullishness continuation past this gap. So the top of this range here, we've already invalidated kind of this fib level, so we can take that off and start looking at where this bullish fib, trend-based fib, wants to see some resistance, and it could be in that region. So just as we did that on the weekly, you can do that on these little mini impulse retrace ideas to give you a projection into the future of where it could possibly go up or meet resistance on that journey to where it wants to go to the upside. So at 23.419 and in this region up to 23.6, if it clears this entire gap, which it's already in the process of doing up to here, all right, so you could see the way paved to 25K in as quick as we came down, we came out. The liquidity grab, folks. The liquidity grab. The definition, true and true. And so these are the kind of ways you kind of chart your journey out of the places you retrace into. Quite fascinating. And then if you get above this and you hang out around this 786 region and we flip this adaptive and these weighted moving averages in our favor, then we start to see ourselves kind of turning from this bearish rejection of these 200 weighted and adaptive moving averages, that we could reclaim them and kind of retake that zone for these upward projections. And nothing can go up forever, so once we release a certain amount, which we said could be at the 23.2 region, which would coincide with the 0.65 and clearing this gap, like you could see it kind of chill out there for a little bit and reset some of the stochastics before either retracing down to this 236 and then continuing higher or not. So ideally, if you haven't gotten in already, you'd want to see this 236 region hold at 22.341, 346, and that would be a kind of refuel zone to look for a potential continuation into these upward regions if they don't already go from here. Okay, so let's go take a look at what we were talking about for Matic when we put out the fair value gap. I have a feeling that all of that stuff got hit and then some. Somebody was talking about it in the Discord. Yeah, we completely cleared that range and we went up to the 2. So this is how the bullish trend-based fibs work. If you put this projection out there, it went up to that one. You could have put a Hail Mary, take profit there, and taken profit on that. It did go up to that region and then some. That's crazy. And you saw it surge up, get sold off, and then continue forward. Pretty amazing. What's going on, everyone? Do you have anything to share, anything to say, comment? It's pretty crazy what's going on. We're seeing it surge right up out of this as we speak, getting huge amounts of insertion of volume here. So this is where Peyton and Smurf kind of shine, because they would be taking these crossover events and putting on the Heikiashi and seeing how far it goes. And so you could just play these bounces off the cloud and be a scalper and have fun playing the channel-to-channel games with scalping and all of that fun stuff it provides you with. And the ones that play out and just keep going up. So you had that beneath the cloud and we keep going. It's crazy. And you had the 2 time frame reset idea. It's an amazing Monday. So we bounced off that 236 up here and then we were gone. I don't know why this is not showing, but let's do 5 minute. Too laggy, I guess. Bearish CVD on the 15. Let's just see what the yeah, this is not the type of thing that I would basically look to short just yet. I mean, you would be looking for 3 hits to something anyway before you do that. So you got the MACD kind of coming up here. Williams still could go up. RSI and money flow still going up here. We did reach with that bearish divergence, which kind of chilled us out here since this morning time. Then that got played out, and then we had the hidden bullish kind of sneak us back in. Let's go look at total real quick. So total bounced off the 618 exactly. Boom. From Friday, it just bounced off the 618 and it was now getting that injection. And we need to reclaim these adaptive to consider going higher, otherwise they could retrace back down into this on the 4-hour, 15, 5-minute. People take their profits at this region and then we come back down to retest the cloud before going higher would be the ideal kind of thought process for this. All right, the CVD got negated. Yeah, cool. And then we went into that region of that fair value gap. It's pretty cool. And the same thing occurring here. You're kind of getting rejected off of the 706 here. Got an hour and 32 minutes for this 4-hour candle to close. It's all about how it can maintain this region. Ideally, same as the total, you want to see it come back into and eat up some of the longs, the late longs, and actually come down to this region before going back. I know I said it should hold the 236, but that's if it's going to continue to rip like in the immediate, if you're already in. But if you're trying to look for a reposition, like an ideal retrace would be somewhere into this region. You got the 15, the 5, the 4 hour. You're basically seeing how the hourly is going to treat you, but you have that Williams in a high position that could come down on you as well. So you got to keep a clear head about bearish divergence possibly forming here. And you're already getting it on the RSI. Bearish divergence forming on the RSI started to play out, and then you got recharged back up. Is it going to close and maintain a bearish divergence? It's all about the candle close. So you could say there's bearish divergence, but until it actually closes with the candle higher, at a higher high with a lower low on the RSI, it's not actually bearish divergence until it closes. So you have to look over here to the right and see that there's 30 minutes for that hourly to close before that gets set in stone. So it's all about how it can bring that value of the RSI up with it or not. And if the RSI value does not go up with it, then that shows that there's some sort of positions being exited and it doesn't have the strength, hence relative strength index, RSI. And then you have the money flow coming beneath the RSI. This is kind of interesting when you see that money coming out, but it could come back in. As it's coming out here, it could get injected back and meet the RSI for that boost up higher. Where has this happened before? Well, you can look down here. You have the money flow coming beneath the RSI and comes back up to it. And so the RSI and the money flow disparity, while it looks busy to an untrained eye, is actually important to see overlaid, which is why I overlaid them. You see the money flow index and the RSI, it gets disparity from the RSI, it comes down to it. It gets below it, it goes back up to it. The RSI moves less frequently than the money flow index because the money flow index is actually the volume weighted RSI. And we've gone over this many times before. What am I looking at here? This is Momentum Master B. You can go to momentummaster.info, link in the description, and toggle through all these settings on B and see what they mean. What is the money flow? What is the divergence I'm looking at? What is the strength, the probability, and the multiple time frame stochastic and all that. And you can toggle each indicator and look at what that is, like what's the trend cloud. Okay. And yeah, go ahead and take a look at that schematic. I put a lot of time and effort into it. So if you have any questions, check it out. And if you want to join, you can as well. So check it out. We're getting some bearish divergence, which was playing out and reset. We're getting the crossable double top scenario on the Williams to see what the hourly can give here. Once again, the money flow is beneath the RSI, so it could come up to the RSI and give it that push to negate a possible bearish divergence forming. And you got the MACD lines also wanting to cross up as well. So just because we got that one alarm that didn't necessarily play out, you could see the Williams peak out and double top here. And we were talking about how when you get the MACD come and hang out in the Williams territory, and then you get that rising sun with the bullish divergence, this is kind of what you want to see, and this would take you back there to the exact bottom. And then we had that kind of limit order set in, and we were talking about the bullish divergence here on the hourly here too. So that would have been a nice little entry point, which coincided with the fair value gap that we had there since January. So that was a nice little entry point for a long. So it's all about how this hourly candle closes. Can it close above the 236 and continue higher at this immediate time frame, or did somebody catch a nice scalp short to the downside? Ideally, for a positional long, you'd want to look for something back in here because we're now currently at a premium level. If you missed your chance, there's always another chance. There's always another day. It's nice to study either way. So anything you guys want me to take a look at while I'm here? Let's go to the current. So by the looks of it, we're at the top of the Keltner channel. We're meeting with resistance on these adaptive. So unless we can break up and hold it, the same thing occurred on the S&P when we retraced down into it. So the ideal position is, you know, if we can't hold that 236 level, then we're basically coming down into the 618 region for a potential bullish order block bounce back up. It's false move Monday, so they will go to both sides wherever the liquidity is once they free it up. It looks like they freed up all the way up to 23.2, so they're moving at quite a fast speed, so they could just go for it from here. You never know. You're meeting with this large amount here, $400 million, these big bubbles, 400 million, 400 million, $400 million, these billions of over $1 billion entered on these big bubbles here, these lines over here. So these are becoming weight that it can come back down into if these guys don't pay themselves. So yeah, I mean, seeing this come up and come back down, these huge bubbles at 22.2, I'm not, you know, this is a bit much. I rarely see this size bubble in this amount. So these longs are a little bit large, to say the least. So coming back down into some of these, like at least 22.67. Wait, where is that? That can't be right. Yeah, we're already doing that. Is that... We should have already retraced to those and popped those bubbles. We're at 23.3. So at 22.67. So we're currently right here, but if we go to the 23.67 region, like beneath these lines, it's because I'm on Heikin Ashi, that's why. The values will also change for the moving averages when you're not in Heikin Ashi. So right now we're up above here. So that's really useful for the scalping thing. I use regular candle to get the longer term projection. So we're currently above the Keltner channel on the 6 hour. Like we should, for all intents and purposes, meet with some sort of resistance here to kind of flag out of some nature and reset some of the stochastic data and try to develop a structure for retracement into this liquidity, and then going into that zone where the 22.9, 22.6 and 22.2 22.2 would put you about here. So somewhere down in this region it can retrace and it would flag out, you know, it could kind of meander around in here. You can also use the ghost feed, kind of create some candles in here, so it could do some sort of candle structure into this before continuing higher and reset some of the hourly on the 4 hour here. So what you got is the 6 hours kind of tapped, so you could come down off of this and see a double top on the 6 hour because you're kind of overbought on that, and the Williams is pretty high. And getting that Williams love with the rising sun on you, on your side, proved effective in this case. So very much similar to this situation back in February 16th, and you start to see it go sideways, ascend up. So it could ascend up into this region as well and create that you know, kind of triple top kind of ascending thing. Let's try to see if there's like a pitch fan that we can kind of glean off of this, that we can kind of get an angle on. Let's see. We could basically change that on here too, so that bearish one has kind of negated itself, so we can kind of like say that we're kind of heading up now. We held that mean and then we came back down, broke beneath it, and now we're heading back up. So if you get that kind of like, you know, ascending channel action, you know, it could follow in these channels. As it does in times past. Pretty interesting. But ideally you'd like to see it kind of retrace for if you're looking to long on that journey up to 25k. If that's the case, you'd find it in the 236 or the 618 area. Maker MKR. All right, let's take it out. Maker. Volume 50k. So this is a kind of lower based liquidity token, but let's just start from the daily. What is Maker? So you had these rockets that kind of played out on Maker from, that's a long time ago. We're on the daily. So you had this falling wedge that played out, bounced off the 200 weighted on the daily time frame. We're getting Saturday came down here, double bottomed out. Monday with everything else, and now we're out in this realm. What is this 940, like $940? What is this? if you don't mind me asking. Maker. Yeah, I'm kind of finding it hard to see structure on this. It looks like a broadening bullish megaphone or something like that. Like you're getting kind of like, you know, some sort of like broadening wedge thing. That's kind of like breaking out here. Not quite sure what to make of it, to be honest with you. Like, I mean, you have this rounded out price action here. This is kind of rounded out nicely. And then you retraced back into this pocket. Let me turn this off real quick. So you had this retrace out of this pocket here. Went into the like 706 region and bounced out. So this was your kind of like cup and handle kind of thing. You broke off of it, broke out of it, and now you're kind of coming back for that retest idea. So you like come back into here or something and then continue higher if that's the case, and then you're looking at, you know, just within that local 6-hour thing, you got another kind of pocket off of that as well. See, I even moved it exactly there. So that would be something you'd look at for Maker in terms of the reset of these higher time frames on the 6-hour and the 4-hour and stuff, and coming back into this candle a little bit and kissing the cloud, which is thinning nicely down here under the top of the Keltner channel. So you'd be looking for this to come back into the 618 of this local pocket for a bounce if you want to see that continuation idea. And that is Maker, MKR, USDT. Next, please. Lower quarterly governance token. Interesting, interesting. So you're already getting that surge out. So if it was, you know, there's no reason it necessarily needs to stop, but generally you have that kind of rounded out. The candle can be rounded too, and then it breaks out too. Because you already went lower from that point. Yeah. Anything else? Yeah, no problem. That's freaking crazy. It is crazy times we live in. So we're breaking up above the 706, going into the 786 region. There's no idea in sight of wanting to come back just yet. The next regions are 24K. It's just going. The bailout of the financial institutions is bullish for crypto because it's showing the cracks in the system. The vestitudes of the old are not as secure as we once thought they were. You know, I'm not gonna be. I can't scream at somebody's. I can't cheer about somebody's loss. Like this entire thing being a farce and being shown up for a farce is, you know, disillusionment is always kind of rough for people to bear. Humans try to fight through thick and thin to avoid change, even though change is the only constant. We like to stay in our habits, so the habits of old not serving us anymore is kind of uneasy for a lot of people, but it is time for something new. But change brings about it with it some hard things to swallow sometimes. So we got this entire caked up region here on the monthly time frame that we could just keep going. That's a lot of billions up here, and we saw the higher time frame, they caked it up nicely to just keep going. They did this in a very, very smooth way. I'll give it to them on that. So congratulations to anyone who positionally set up on something down here in this region. You are a winner. And you're getting those 6 time frames overbought, but it's all about how the lower time frames send it, irregardless of how the higher time frames are asking for it. And so what do you look for on these things to see the fatigue? So you want to see these baselines kind of going above the price action, as this thin one is starting to show that first. And so if you start closing 15-minute candles that can't stay above this baseline, then it's starting to show a fatigue here on the 15-minute. And so you start looking at that for some bearish divergence to form. We're going to stay to the hourly to see if that hourly divergence locks in or not. That's why we're chilling with you until the hourly close. And yeah, you have the Williams also in an overbought state. Money flow starting to come up, the MACD coming up, similar to the MACD coming down below. It's now getting into the realms of the RSI saying what's up, getting overbought here. So you could see a pullback on the 15-minute time frame for BTC at this region. It's still after a large move. Sorry, this is the 5-minute time frame. Let's go to the 15. And so you start to see that kind of the fatter line getting above the price here, and you're getting these two lines kind of crossing, and this is what the crossover events are that the scalpers in the Discord love so much. Is you see these cross, and especially on when you start to see it cross on these higher time frames, you can take them and start to apply Heikin Ashi and see when they start to cross, and just ride the crosses down. So we're at this resistance area of these fibs. This is where you would be looking for that to occur. And you see these starting to go above price. You're just waiting for this to cross. And you get a candle without a birthday, with no rejection wick here. You have the bullish divergence here. Technically it already crossed here, but it went up with an extended M. So this you could look to see, did that cascade to the 2-minute crossover event? And we did have a crossover there, and we're on the outskirts of the cloud, but we're creating this ascending channel of bullishness. And this is where you see that the baselines go above the price as so, and it starts to tell you where these fatigue points are starting to come in, and you see these cascade to other time frames. And then they start to get heavier as they cascade. So you're starting to see that 4-minute here. So you could just take a little short scalp on the 4-minute and just see where this one that closes. It needs to close in that state. Oops. So it needs to close with no wick like that. This is actually not the actual right time. You have to wait for that to close, apparently. So you'd wait for that to lock in. Actually, you don't want to front run that like I just did. Like, you want to wait for this candle to close in 2 minutes and 40 seconds. And then if it closes with that birthday candle and this cross, then like it's likely going to see a 4-minute dump on this time frame where it would go and reset some of this, stochastically speaking, and you could ride that as a little scalp and see where it goes as you move your stop loss into profit. And these type of crossover events on these leading moving averages. What are the leading moving averages? Well, these are what we call the baselines. So they're your first signs of reversal. The baselines are one of the few leading moving average formulas you will find on the market. When price action rests on or above these and these baselines begin to cross, upside begins. Conversely, as price action closes beneath these and begins to cross, downside begins. While this formula works well expressing the first signs of fatigue on all time frames, this will ultimately be a scalper's dream. And it sure is for a lot of the people in the Discord that use it. Shout out to Peyton and all the guys, Smurfington and Subby Guy and so on and so forth in the Discord. And so you see these getting above price, and you just take the signal at face value and just take it when it closes, ideally, is the safe bet. Wait for it to close with that no birthday wick. With that no wick top there. See, now it's creating a wick, and that's why you wait generally for that wick to occur. See, this is now a negated signal. It's negated because it created a wick there. And this is why you would wait for that to occur on that time frame. So this one is not valid. But they said you see an indecision doji first. So the indecision doji occurs first, and then you start to see the birthday wick thereafter. Let's go to the hourly time frame. We'll come back to this. We'll go back and see how it closes on the hourly time frame. So it could get that rejection on this 706 region. You're seeing all of this new liquidity getting enticed in at the beneath it. It should see a retrace back into this at least a little bit at some point. It's just been going hardcore since midnight of my time. It's almost 24 hours. It paused for a little bit. Yeah, so you got to see those working out ideally from the 2 minute, and you would be going to the Heikin Ashi, testing out that strategy. And they said you normally see the indecision stuff, and then it starts to do that crossover with the no candle underneath idea, and then it has to close with that, and then you just smoothly enter on some divergence as well. And this is where you're starting to get these above the price like this. It's showing signs of fatigue here, so it could go sideways or start to come back down into these regions down below. And you could see a little bit of a retrace down into here that would coincide with these liquidity pools that they've created of longs down to 22.6 and 22.2. So they could come back down into that immediately and take out a bunch of 22 billion now imbalanced in longs all the way down to here at 22.2. So you'd be looking for this to occur. Let's just hang out a little bit longer, shall we? Wow, BTC. Alrighty then. So now we're getting these on the 5-minute time frame. Let's see what the 4-minute is doing. You got that indecision doji and the cross was confirmed. So now you're just trying to see when it makes that no wick like this thing. When it closes this type of candle on the other side, then you could see this surge up like that. Or conversely, you see this bearish candle with this crossover like that, then you could see it come down like that. So you're trying to see that type of candle formation with no wick to the upside with the crossover for a intense rejection. Starting to see the cloud taper here and seeing this kind of thin a little bit, showing the volume. People are taking profits, getting the price, the baseline's kind of like flirting with the candle a little bit. You did get the crossover here and this no wick candle here, so you could just play this scalp too if you were just doing a long 1 minute one. You could take that, even though it's at a very extremely overbought status.
It's like meditating. You need to focus on something specific. A word, phrase. Don't expect to name it so quickly.
You're getting this above the price. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Let's see how that hourly divergence formed or not. So we didn't make a higher high on the RSI. This next hour is going to be the pivotal moment, whether this pushes the RSI above this value or not. You're having that money flow out, though. The money flow is creating a bearish divergence. If we go to a lower time frame, we could probably see it lock in a little bit. Where we're getting hidden bullish, the hidden bullish on the money flow here was where we got that injection back in on the 30-minute. So the 30-minute was the guide to the promised land here. It looks like you went back to the cloud on the 30-minute, held it very strong. You had that hidden bullish divergence on the money flow, and boom, you were gone.
Look into the mirror. Imagine that you're looking at the other side.
Which also coincides with the bottom of the channel here.
You need to focus on something specific.
I like this track.
A word, phrase. Don't expect to name it so
So if you just played that cross right here and you had that birthday candle idea, you could have just scalped that to the upside right there off the cloud on the 1 minute. That's crazy. It's literally crazy what's happening, how quick they're going up to these regions. We're seeing a surge on total right now. We're getting millions injected in as people start to fear the old financial institutions and the FUD starting to come to them as opposed to crypto now. There's more shorts that just keep opening up and funding this journey higher. And we still have these regions of liquidity that we just keep going and gobbling up. All right, so the hourly did close 5 minutes ago. So this hourly play is playing out right now. Let's go see what the dollar's up to. Dollar's breaking down to that 236 region we were talking about. If it can't hold that, you could look for the 618 down at 102.753. And the S&P also was oversold at that region for that fair value gap we put out on Friday. It's just kind of chilling right now. Got that crossover, retest off the cloud, boom. You're starting to see that surge on the S&P. So the S&P is creating like that inverted head and shoulders. This could continue higher for Bitcoin based off of how New York is playing it. You're seeing the money printers turn back on as they bail out the banks, and it's making a bullish move for a lot of things outside of the dollar. Let's look at gold really quick. Gold and silver also going up right now. So everyone running into gold for that store of value. Silver as well. There's some gaps they filled from last Wednesday, and boom, they were down. It's crazy. For all intents and purposes, you should see the dollar get a slight bounce while Bitcoin kind of chills out and meanders around in this zone, though. You know, to go up forever doesn't make economic sense in terms of how they would just have to retrace back down into these guys they're already currently paying. They need to give them a little bit of fear and run for their money a little bit too. So ideally you'd want to see it come back and triple top out and retrace back down for it's crazy though. It's just like going for the gold. And this is where you can get back in if you were just so inclined. You just shut off your brain and you just see the crossover event. You had that no wick birthday candle and you just ride it up. And that's what they're doing. Oops. It's crazy. So if we look at just this alone, like let's just take off that and go from this. So the 24, like it just wants to go straight for the gold right now. It wants to knock out that that 25K region. It looks like it wants to go straight for the 25K shorts. I think quarterly expiration also expires on Thursday, if I'm not mistaken. So the options expiration. When do options expire? When do quarterly? It'll be the last business day of the financial quarter, March. But I thought the futures options expiration was like the third Thursday. What expires on the third Thursday of every month? Finance. Yeah, futures. The futures options expiration is normally on the third Friday of the contract month or in the United States. So that would be this Friday. So the futures options are expiring on Friday too. So they're trying to squeeze out the shorts before they expire. Interesting. On the quarterly. Nuke printing on BTC. Let me see. Nuke printing. What chart are you looking at? Oh yeah. Nice. That was the Coinbase chart. Oh, it's printing on that too. So what is going into the formulation of these symbols? So the nukes has some special sauce, which is, looking at other things, but long story short, it's looking at 32 different values of indicators across multiple time frames and giving you these circles and diamonds, and so it's showing you that there's a fatigue and elasticity, if you will, that's being overstretched beyond its norm on a large amount of indicators to have that appear. Now, the higher the time frame that this closes in, and it needs to close with that there for it to remain. It's a candle's close specific formula, so it's leading. It appears in the moment as you're seeing, and it needs, in order for it to remain, it needs to be locked in at that value as that candle closes in 13 seconds. So it would close, and then that locks it in on the 1 minute, and then if the 5 or the 2 or 3 minute can lock it in, then it stays on that time frame, and if the 5 minute can lock it in, it stays on that time frame. And so we locked in 1 minute nuke on that time frame, and you tried to see if that is going to play out in terms of cascading, and I call it like cascading to higher time frames. So you would watch for that to occur on a higher time frame, and that cascading event. So the 1 minute wait of a nuke does not really make a strong nuke as a 4-hour nuke. So if you see that appearing on a 4-hour time frame, then basically you've been overstretched beyond your boundary, and that's a pretty safe thing to enter on or to think about. We had the rocket ship once again appear down at the bottom here on Friday. And now we're getting the nuke. So that's, I believe, having to do with the weekly time frame and the situation it's at. So the daily and the 3-day are still in your favor, but and so you get the crossover event on this, and we switch to the Heikin Ashi formula. And you get the crossover, and if you get the no wick, so we saw how you get the no wick bottom and the crossover event on the bottom, and then it just goes up. So the same thing occurs if you get no wick that closes in the other direction. And so you could just scalp the living daylights of these 1-minute crosses if you had the time and the effort and the energy. So it looks like it closed, so you could just try. Come on. And so you got one that closed with what's it called? With that crossover and no, you had an indecision doji, and then you had one with no wick. So that would be kind of valid as per the system. And then so you just ride it out and see if it plays out on the 1 minute and cascades to the 2. I think they use the 1 minute more for the stock market rather than the charts, and you're trying to see if it cascades to the 2 minute and above. Nuke printing on BTC 1 hour. Did it get locked in? It print like so the symbol appears across all the time frames. When the candle closes, it locks that symbol in its finality. So unless it can close with that intact, the nuke doesn't really stay stuck in stone. Yeah, you definitely don't want to be like actually fighting the trend that seems to be forming here. It's holding this bullish trend fib line too. So if you go to the higher time frame and see what this is, this one that we put out here, this one from the simple 15-minute impulse retrace idea. So you could be looking for these like rejections at these fib lines and then trying to play these scalp plays to these next fib lines down here. So it's acting kind of like wonky right here. It's not really showing that fervor. So this would be where you consider trusting it or seeing it cascade here on the 2 minute. You did have an indecision doji on the 2 minute, so now if this gets across with the no wick thing, it could cascade itself to the 1 minute, from the 1 minute to the 2 minute. But you're already experiencing a little bit in this bullish manner in the drawdown fashion. So where are the where's the liquidation events even? Why is it not turning on? I want to see this on the 5 minute. So we reached up into the 24K region. That was a pretty amazing move by Bitcoin from 22K up to 24K in like an hour and a half. So that's pretty amazing. Seeing some immediate take profits from some people here at this region to see it bounce back down into one of these trend-based fib levels would be an ideal thought to have. Getting the crossover on the 2 minute. But still no rejection wick. Negative print on the 1 hour, but 12 minutes left. I have this area as a potential reversal, so watching closely for shorts. I wish that indicator, the free one, would work right now, because then I could see like which trades are being opened up right now. Looks like they're squeezing it. It's not closing. So we're currently 22 billion in the imbalance to longs now. So we previously were 29 billion imbalance to shorts. We grabbed all of that. So how far are they going to go before they start to take some of this back? We were talking earlier at the start of the stream. It's amazing how far we went up from that time. So these 400 billion large bubbles now are pretty far away, these lines. So, and they keep funding more shorts, 100 million, 100 million, 100 million, 100 million. And so these guys pave the way for potential upside, but as these start to get more imbalanced, it starts to get weighted against them. Yeah, this would be too rich for Argolet, so I would get out of that. You just don't want to pump that stuff. And as it becomes more into the 24 22s, you're going all the way up into these 16 billion regions. 22.2, you already took this 15 billion. You have 22.3, 16 billion, and this entire range all the way up to 25K on the monthly time frame is now stacked, filled with double-digit billions of liquidity. If we run this again, it will probably update to show what was taken. So it came all the way up and took all of this. You still got 24.6, although we're starting to reverse. So for whatever reason, the nuke disappeared for that moment in time that it appeared. So that's why you wait for these things to lock in as they appear. When we caught the bottom of the market, there was like, it locked in on 3-minute time frames for 3 minutes, like 9 minutes consistently. And that was the actual bottom of the market. So it didn't stay. So the nuke is still not yet locked in stone. The last time we did have a nuke that locked in stone, we'll go back to that point and just show you what we're talking about, like what is the nuke, so to speak. So this is going to take forever, so we're going to go to the daily time frame. So the last time we had the nuke was at the actual top here. It appeared on the hourly time frame once, but that was all you needed. You can't go back on Heikin Ashi, you have to use this. And so we're going to go back to where it appeared at the top. Okay, so here at the actual top that we were at, we had an hourly time frame here. Where is it? There we go. So it appeared for 2 hours and it locked in, overstretched on those 2 hours, and that was it. They had a stop hunt rise, and then that was the top. And we saw that downside from there. So you ideally want to see it close on an hourly time frame and above for that to remain on that time frame would be an ideal position to think about a reversal, but it's definitely not in that zone as of yet, even if it is appearing in the moment. You want to see it push up to a level that is obscene, where it locks in on that higher time frame, and then that's your entry. So it looks like they're pushing beyond the 1 to the next point would be here. 25K, not necessarily out of the question. They could come all the way up to this region now. In January, Tesla made a run for it. Maybe Bitcoin's going to make a run right now. It's like literally making a run. While everyone's making a bank run, Bitcoin's making a run to the upside. So the next gap in this level would just take you up to that region. And then you reassess the situation here. And so how are we getting these numbers? Once again, you use the impulse retrace idea of the trend-based fib extension tool. You find these under your fib retracement tools. You can favorite them over here, and then you get your trend-based fib extension tool. You do a click of the impulse to the upside and the retrace, and then that will give you your levels, 2, 3, 6 for the entry confirmation, and then boom, you're gone to those regions, and then you meet with resistance on the 6.5, 706, 786 region. And if you get permission to go above that, then you go to the 1. And if you get permission to go above that, you go to the 1382. And it doesn't take that long before you get to these ideas necessarily after you get that permission, if you don't fade. And then I used this previously to move stop loss into profit underneath these regions, and if it kicks you out, that's where you. So once we got above this, the short play was kind of invalid. If we fell below it, we'd go to here. All right, ladies and gentlemen, your time is valuable to me, and I don't want to take that much more of it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. Thank you for doing your part and coming on in. I hope you are blessed today and have a nice day going forward, and I will catch you on the flip side. Thank you very much for stopping on in, and I will catch you later. Peace.